Okay guys, good afternoon. Okay, good morning from here. So currently I'm taking a trade on vix51s live account right here. You can actually see it right there. So from the post I recently did on Facebook, I've had the trade since I guess 3 days ago right here. So I had a trade, okay, let me just say it's 2 days ago right here on 51s, and yeah, okay, previous day. All right, so then I had another entry again right here, and my previous entries, still holding on it, and most of you guys know that I am a swing trader. I had two positions right here. Okay, I had two positions right here, and then an extra two position right here, and then another extra two position right here. So I'm stacking them up, and I take profits are here. So it's a total of six. Yeah, total six, 246 positions. Take profit out here, $200. I could possibly still watch the price to see if it will retrace backwards after it takes this low. Then I will close the trade manually. But for now, I am leaving it on $200, expecting the price to trade lower for the whole of February, right? So it's like holding the trade for a month, and yeah, just a month. That is now a position trade, no longer a swing trade. Alright, so most of you guys know these are the type of trades I like to take instead of scalping, day trading and stuff like that. Now, explaining this, I used a confluence of the Wyckoff schematic distribution phase right here to execute the trades. Now, the first thing you should know is that on the monthly time frame, when you go to the higher time frame, you will know that this is bearish, very much bearish, positively trading lower. And then if you go about, okay, so also if looking at the monthly time frame, you'll see that we had a hunt on previous month high. All right, so I don't want to take my drawings off, but we have a hunt on previous month high. Then if you go down to the weekly time frame, you can see that there is no bullish movement right here, but bearish movement, and we retrace backwards a little, and that is how we printed the Wyckoff schematic phase, the Wyckoff distribution phase right there. And if you go over to the daily time frame, this is it right here. So you can see when it did a little pullback, we had this weakness from right here. You can see how the candlesticks were trading. It's showing that it's not trading in a positive way anymore. It showed a sign of weakness. Then 12-hour time frame right here, you can actually see right here high, low, high, low, high, and then we had the violation. And going down to the 8 hours time frame, this is right here. See how this trading? This is trading in a choppy market, in a choppy way. And this was the previous month's high I was talking about. January and February hunted that high, and then break the structure. This is the simple SMC setup, which is a stop hunt plus a break in market structure, then a return to other block that is done on this 6-hour other block, which is also an 8-hour other block. So we find it down to the 8 hours time frame, 6 hours time frame. This is it right here. We had the other block, we tapped into the other block. I have my confirmation entry and then took the trade right there. After we have this inducement taken out, which is the smart money trap. Schematic right here, we have the permanent supply right here. We trade lower. We have the buying climax, we have the automatic rally, we have the ST secondary test, we have the sign of weakness, we have the U-turn, and then January traded higher, and then we finally have the U-turn. This is the UT. We have the U-turn, which is a stop hunt plus a breaking market structure, and then we are now have a return to other block. Now, when the market has been trading since January, we have it tap into a demand zone, we bought tap into a demand zone, did a hunt, and then break the structure. Then that is what made this supply zone, this other block, valid, right? And then we have an inducement right here. Sometimes I always teach on the mentorship that we should always have a liquidity that the algorithm will have to take to mitigate the order block. So I didn't refine this to this 4-hour supply zone. I just used the 6-hour order block. I watch how the price tapped it, and then look for a structural shift on the lower time frame, right? So going down to the 30 minutes, right here. So the entry was refined on lower time frame, 5 minutes time frame. Where was it? All right, so this is it right here. So I think, yeah, we first tapped, we traded lower, we came back again, and at this time when this is trending backwards, just trading in a structure, we have this high, we have this low, we have this order block, we have this high, we have this low, we have this order block, we have this high, price violated this order block. We trace backwards to this supply. Responsible to that, you can actually see is an engulfing candle, which is a valid order block. Tap into this demand zone, also violated it, trade lower, and it trace backwards to the supply zone, and then I took the trade, and then I marked out a fair value gap right here. Okay, and price did order flow, IOE, I don't know, order flow, I don't know what ICT call it, I think IOFED, something like that. So we trace backwards and we trade lower, we have a breaker structure right here. So this is my lower high, this is my lower low, lower high, lower low, and then I had another entry at this supply zone, price tapped, and I refined again to lower time frame. Find again to lower time frame right here. Alright, so on this one I was looking at the fair value gap right here. Price violated the fair value gap, right? And it violated it when it established the demand zone. So when it established the demand zone, it violated the fair value gap, and then what it did was a liquidity grab, trade into the fair value gap again, but did not use it as a support. So it traded lower, violating this demand zone, and then it traced backwards to use that as a support. Then I had my entry right there, right? And then the next one was, I was looking at 3-hour order block right here. Alright, so this 2 candle is an order flow, another block also for our time frame is a fair value gap, so I use that as a confluence also. So 1 hour time frame, I was looking at this taking the supply, but based on I was looking on the higher time frame, I didn't mind to focus on that of the 3-hour time frame. And the lower time frame, I had the entry right here. My first entry was at the 1 minute time frame. I was watching the price. Price was trading high, low, high, trading to the order block, high, trading to a demand zone, high. Then this demand zone right here was violated. Immediately I noticed that it is going to get violated after the sell, and then this one turns out to be a breaker block. Alright, so it's like a stop hunt, structural break, then the breaker block, had the entry, and now still swinging the trade. Yeah, that is just a brief breakdown, and most of you would thought that this is going bullish, but it's just a pullback. Alright, there is no structural retain right there that I saw, so still holding the sales. And yeah, see you guys later on. Take care and be safe.